Good morning and welcome to the Farm Science Review for 2025. My name is Josh Winters and I'll be moderating this session for Ask the Expert. For this session, we're going to be talking about Beef-o-nomics, understanding the cattle markets with Garth Ruff. Garth Ruff is an assistant professor and the beef, cattle, and livestock marketing field specialist for OSU Extension. He is a two-time graduate of Ohio State University Animal Sciences. He's managed an extension program in beef cattle production systems, livestock management, and farm-level economics. He is the co-leader for the OSU beef team and coordinator for the beef quality assurance in Ohio. A native of Morgan County in southeast Ohio, he grew up involved in 4-H, FFA, and showing beef and swine. Garth continues to be active with his family beef and crop farm and currently has a small flock of sheep. Garth, welcome to the show.
Thanks, Josh.
So we're going to go ahead and kick this off with our first question. So cattle prices are historical highs right now. What are some factors that are currently contributing to this market?
Yeah, so I think to understand where beef prices are right now, we've really got to turn the clock back to 2021, 2022, where long-term severe drought in the western part of the United States, where a lot of our beef cows, Texas, Missouri, the upper plains, they were dry for an extended period of time. We culled a lot of cows in those parts of the country in 2021, 2022, set some cull cow records there in the spring of 2022 in terms of numbers. And then some moderate sustained drought across different regions of the U.S. So we're at a beef cow herd that's as small as it's been, since the 1950s. We've been on a continual downhill slope really since about 1970, and to compensate for that, as cattle have gotten bigger, carcass weights have gotten heavier. But right now we've got a very limited supply. Demand for beef continues to be strong. And that's what's driving cattle prices really across the board.
So producers, they always want that highest high that they can get. How can these producers take advantages of these record high prices?
Yeah, it's kind of an interesting conversation. When every calf today is worth, a wean calf off the cow, between $2,000 and $3,000, depending on how heavy they are, and some worth considerably more than that. Do we continue to do some of those management practices? My philosophy is if it's a good thing to do when prices are down, it's an even better thing to do when prices are high, right? So we need to continue thinking about some of those management practices, preconditioning, vaccinating, castrating, because on the back end, right, when we get these cattle off the cow and either into a backgrounding program or onto the feedlot, the death loss piece is more significant than it's ever been. Don't take very many dead ones to really screw up a balance sheet on a load of cattle. So as we keep that in mind, continuing to do those little things, when we get cattle into the feedlot, still thinking about implant programs, how can we add value, cheap corn, the old saying, cheap feed cures a lot of missteps or a lot of headaches. That's still partially true, but cheap feed's not the answer to poor management on the cow side of things. So we got to continue doing the little things right, even when prices are high.
So the farmer who's producing the cattle, they're really benefiting from these high prices. But what are the consumers seeing from the retail side?
Yeah, retail beef price is as high as it's ever been. But the demand, continues to be, I would say, strong. It was really strong here until, recently. We're talking ground beef price over $6.25 a pound across the board, across the country. At some point there's going to be some pushback. But from a farmer perspective, the best way that I can explain it is, we worry about retail beef price, and if you're selling freezer beef, maybe we should. But from a production level standpoint, especially on the cow-calf side, right, we're selling calves. I don't get too worried about the retail price of beef if I'm a cow-calf operator. Because that market on the retail side will correct itself over a period of time. There's some conversation about margins across the board, and certainly, the packing sector has made quite a bit of money, the last 5 years previous to this kind of high in the cattle cycle we're in. packing capacity, if there's hooks to fill, this cattle market's going to stay pretty good. So, yeah, retail beef's high, but thus far it's kind of been amazing. The retail grocery stores starting to see a little pressure. Glenn Tonger out of Kansas State kind of has the beef or all protein supply and demand kind of data he puts out there every month. But the restaurant side of things have just been absolutely amazing. What folks are willing to spend on a ribeye or even a hamburger meal on the restaurant side of things has remained really strong.
So you mentioned such a high price, and consumers are still currently going and spending that price. But what's the tipping point? What's the tipping point when those producers or those consumers see those high prices? When do they quit buying beef?
That's the $1 million question, right? And that's a question that, even going back into 2023, when we started up this peak kind of in this cattle cycle, that was being asked. I think the freezer beef side of things is where we'll find some of that out, right? And it's not so much price per pound on a piece of beef or, a pack of steaks, a pack of burger. But that cash outlay for a quarter or half of beef is getting to be pretty significant, right? And how many folks can afford that lump sum at one piece at a time, as the kind of macro consumer economy continues to be under some stress. I think the freezer beef side will tell us or be the best indicator of when we're getting too high. And it's not, like I said, not per pound per piece, but when those whole size and quarters, I can definitely see some pressure there.
If producers are thinking about expanding their herd currently, is that a good option for producers to do?
Yes and no. I think it's the answer, right? What are these bred heifers going to be worth this fall is a question that remains to be seen. In my mind, if they're in the low to mid threes and guaranteed bred and had all their shots and whatnot, there's probably some value there. But can you buy $4,000, $4,500 bred heifers, sit on them for 6 months, right? Interest is still high, right? And I think before we see a bunch of heifer retention or purchasing of heifers, a couple of things have to happen. One, it's got to rain, right? And most of Ohio is pretty dry. This time last year, we were talking about eastern and southern Ohio being really dry, and we're not far from it again. Our conditions now are about August 2024, right? So we're not to our peak dryness, but it's dry. And that's really across the large part of Ohio. That interest piece is huge, right? How long can you lay up on interest before you have a calf to sell, right? If I buy those bred heifers today and they're due to calve in March, and I don't sell them next November, right? That's a significant interest payment that I've got to stomach for a year. Visited with a farmer here a couple of days ago, had the opportunity to buy a herd of fall bred cows. That's a lot more intriguing, right? He's going to get a down payment. Those calves will hit the ground here in the next 30 days. And there's some potential there. But I think interest is a big piece of it and something to consider. On the retaining heifers piece, man, it's tough. And then feeder cattle are bringing $4 a pound at the sale barn. It's awful hard to keep any more heifers than to replace the cows that you've already sold, right? Now, to keep that in perspective, those cull cows are really valuable. If she's got any weight or any flesh at all, she's a $2,000 bill. So I think guys will continue to replace the cows, at a normal culling rate. But with feeder cattle prices where they're at, it's awful tough to keep more heifers than what your culling rate currently is. And it's got to rain to do that. I mean, like I say, cheap corn solves a lot of problems, but it's not a silver bullet.
So Garth, I want you to get your silver ball out, looking into the future. What's the outlook for the cattle and beef markets going forward?
And that's a question just ask out there, visiting with some farmers. As we think about herd expansion and retention and supply and demand, right? If we start retaining heifers, what's that going to do to the beef supply in the feed yards, right? We're going to cut back the available number of head in the feed yards, driving retail beef prices up even higher. So that's one piece of the equation. The other piece of that is if I retain that heifer above my culling rate and I breed her today, how long is it before she produces beef that hits the retail shelf? Right? Not going to change biology a whole bunch, as much as we like to think we can. If I breed that heifer today, gestation's still 9 months. That calf's going to be on that cow for another 7-ish months. Then I'm going to feed that animal, right, for another 7 to 9 months. So we're looking at over 2 years before we see an increase in beef production. That is, if we retain heifers at a clip faster than the national culling rate. If you follow some of the data out west, the feed yards are so desperate for cattle, they're outbidding ranches at some of those big auctions just to fill bunk space in those feed yards. So the need for beef right now continues to outpace the demand or willingness to pay, maybe not demand, but outpaces the willingness to pay for replacement feed mass.
Garth, what's some final thoughts you want to leave the audience with before we let you go?
Done a bunch of radio interviews on this topic this summer and, trying to figure out what that outlook is. And like I just said, for the next 2 years, which is basically a generation interval in the beef cycle, 27, 30 months, things look relatively good on the cattle production side. Our exports still remain pretty strong as on the beef side. Domestic demand has stayed stronger than a lot of us thought it would. We're starting to see some downward pressure at the grocery level on things like ribeyes and those high dollar cuts. But I would argue there's still quite a bit of value to beef in that retail space. Up until the last 6 to 8 months, that margin between beef and pork has been pretty steady. The last 6 to 8 months, we've kind of outpaced that. And even that margin between beef and chicken, going back to 2015, has been really steady, right? So it's thinking about where beef falls in that retail space and what is the difference in price between beef and pork, beef and chicken. Up until recently, we've been right there. That margin, as all prices have continued to increase, has stayed relatively consistent. So on the cattle side, things look really positive. Packers, have changed folks to fill. Their overhead cost doesn't change whether they're processing beef or not. The other question that's been asked over and over again is how big can we get some of these cattle? Once again, that overhead cost to process a 1,600 pounder is the same as it is a 1,200 pounder. The days of a 1,200 pound fat steer are probably gone, right? Unless you're solely in the freezer beef business. We look at some of these sale barn reports around the state that sell a number of fat cattle. Those cattle are 14 plus that are making those market reports as far as load averages and such. Now, bigger cattle have some challenges in and of themselves. We've seen an increase in bruising and those type of things. Right? We haul cattle by weight, not by head. Think about how we load trucks. I get fewer 1,600 pound steers on a truck than I do 1,200 pound steers, by a couple head. There are small and kind of middle-sized feeders here in Ohio. That's not a huge thing. But as we think about filling pens of cattle in the big yards in the West, that does become kind of a challenge, right? If I take 2 or 3 head off each load, and instead of hauling 36 head, I'm hauling 33, how does that look? Close out when we close out some of those bigger pens. Trucking freight continues to be a concern. That's one of the challenges here in Ohio without having a large packer. Within a couple 100-mile radius, everything goes to either the eastern side of Pennsylvania or to Illinois for the most part. We can send some Holsteins into Michigan and get those processed. Dairy beef on dairy type of calves. And there's another thing, that beef on dairy concept, while not a new concept, really hit big at the right time. Not only on the dairy production side, but pounds of quality beef into the beef space. We've got those cattle genetically figured out to where their red meat yield's pretty competitive. Not as good as native cattle, but a lot better than a straight type Holstein. So there's a lot of factors there. Pounds of beef I think it's a topic of discussion going forward. You know, we talk about per capita consumption in 2025. At the beginning of the year, you know, about 2.5 pounds less than 2024. But that was all due to the beef just not there. But from a cattle side, you know, we're looking at least a generation in our before we see any difference in the supply. What might influence some of those prices, right? We've seen it last week when the government or the current administration makes a comment about lowering retail beef prices. What happened? Feeder cattle limit down for a day or an afternoon. Now they've bounced back since, you know, so there's some of that volatility type of thing to consider. The screwworm deal in Mexico will be interesting. See where that goes. You know, we start importing Mexican feeder cattle again. There might be a little downward pressure on feeders, but you know, up until last November, if you kind of paid attention to when we stopped bringing in those Mexican feeder cattle, and then we let them back in for a little bit and stopped. This feeder cattle market was on an upward trajectory anyway. Seasonality, as we typically describe it in the beef side of things, has not existed for the last couple of years. Right? We used to talk about seasonality in the beef market. On the feeder cattle side, right? When were those prices the lowest? In the fall, when we sold the most cattle. That wasn't the case last year. Our seasonal low was in August, and prices continue to climb really up through present day. You know, I can tell you in our home operation with some of the risk management tools that are out there now, it was kind of a tough decision on, do you invest in some risk management when the market continues to climb upward? But with the price of cattle today, those tools are greatly need to be considered as options in the toolbox.
All right. Are there any questions for Garth relating to the topic today?
So, does the drought affect the grass?
So the question being, does the drought affect the grass and hay quality and the availability for those cattle?
Yeah, so you know, certainly in the West, a lot of those beef operations are based on grazing. So there's just no feed available. They're 2021, 2022. It's usually not cost effective to buy hay in Texas because of the freight and logistics of getting it there. Here locally, right, we were dry eastern and southern Ohio in 2024. We did a series of programs late fall, early winter on how to supplement those beef cows. So last year we were in a forage shortage situation to get through winter here in Ohio. This year it's been a little bit different. We were really wet into June, right? The large portion of the state was really wet. So now we got a hay quality challenge in 2025. We did some sample collection, had 180 hay samples from 29 counties in Ohio, and only one out of 180 hay samples will support a lactating beef cow. So this year we got a hay quality problem. Now pasture is getting short across most of the state. We got folks feeding hay, feeding silage earlier than they would like to. That's a challenge in and of itself, right? We just bag that silage and we have to open that bag. We're going to have some feed quality issues there because it never completed fermentation. So yes, all the above. Drought has a significant impact on pasture and hay tonnage. Usually hay quality in a drought year is pretty good. Hay quality in a wet year is terrible, but tonnage is up.
Any other questions for Garth?
That's evolving and getting bigger.
Yeah, and that question was on beef on dairy. And just read an article last night, you know, think about the dairy operation and how they've traditionally combated low milk prices. You know, you used to call cows when milk prices were low. But now with the day-old beef on dairy calf being worth $1,500, you can not call some of those cows because you're banking on the price of those calves, making up for some lost revenue on the milk side. Not a new concept, but really took off in about 2017 as a way to primarily manage dairy heifer numbers in this country. We know we need a finite number of dairy cows in order to sustain decent milk price. 9.1 to 9.3 million dairy cows. So as a way to mitigate a surplus of heifers, and farms have been doing this on a small scale for many years, right? Cleaning up with a beef bull or something along those lines. Early on, it was let's breed whatever beef semen we can get, right? Get cheap and breed them to our dairy animals. Now we've got beef genetics companies selecting bulls specifically to breed either Holstein or Jersey cows. And what that's done is improve the red meat yield of these animals. That was always a challenge. How do we market these beef on dairy type of calves? In 2018, 2019, the marketing was challenging, right? You were investing more into semen. That calf was theoretically worth more because some of those animals will make CAB type specs, but we're marketing them as Holsteins, right? So can you take a Holstein price on an animal that's more efficient but costs you $400 or $500 more the day you buy it? That was tough. But now we can market the better end of these beef on dairy calves pretty similar to native beef cattle. We got to select for some muscle. And stay away from what I call quote unquote black Holsteins. That's not getting us where we need to be. But some calves that got some muscle, have some cutability, has really improved the beef on dairy, and it's helped make up some lost pounds from our native beef production.
Any other questions for Garth?
Earlier you mentioned Kansas State, that's the protein. Who is that?
Glenn Tomser, he's an ag economist out of Kansas State. Does as much meat research as anybody. He puts out a monthly report on demand for all proteins at the retail level and at the restaurant level. And then what they do, you'll compare that to the previous month and the previous year percent change. And that's probably our best indicator that I've found on, where is the consumer thinking on either that eating experience, eating out, or going to the grocery store and buying meat, right? If we see a steady or positive change, right, that demand's strong. If we see a negative change as far as percent of the total, then that's an indicator there's some negative pressure on domestic demand.
Probably have time for one more question if there's any other questions for Garth.
When's pricing moving?
Like I said, question was when's price going to go down, and at some point it will, right? But as long as we're in this low supply, strong demand, and demand's still strong, it's going to take some time. We will rebuild cow numbers to a degree. Will we ever get to 2019 cow herd? I don't think so, because we've made that carcass so much heavier in the last 5-6 years. So it's a delicate balance there. We used to talk about a cattle cycle being 8 to 12 years. Yeah, we've been riding what we thought was the high on this cattle cycle since 2023. And how long are we going to continue to ride kind of this high, or a plateau at some point? But as far as the price completely crashing, it's going to take one of those black swan events or my caveat in producer meetings, the government to screw something up. What will this screwworm thing do? I don't know. In my mind, if we get a positive screwworm test in this country, it's only going to drive cattle prices even higher, because we're going to further limit some supplies. I don't, I'm not a long range forecaster. I deal with the biology of the animal, and that tells me for at least the next 2-3 years, things should be pretty good. As far as the number of, That's always an interesting topic to discuss is the number of cattle producers in this country. And as the number of cows goes down, what's the logical answer? The number of cattle producers is going to go down. The other piece of that is, right, we've made these animals bigger. I've heard the argument, well, there's not as many cattle producers as there was in the 1960s. How many cattle producers want to raise the same kind of cattle we were raising in the 1960s? Right? They were belt buckle high. We're sell pounds, not number of animals necessarily. So yes, the answer is the number of cattle producers has gone down for a variety of reasons.
Alrighty. Thank you, Garth, for being on Ask the Experts. We will resume here at 11 o'clock with AD. They're going to be talking about economic crosswinds, what's driving your bottom line. So stay tuned for that. Thanks, Joe.
Yeah.
Not a current one. No. I don't have one. Yeah, I'm pretty easy to get hold of.
I just about forgot to record that one. Margaret?
Long time no see.
Good to see you.
How are you?
Well, thank you.
Good.
And you? Summer is moving around well.